All right, I've been promising everybody to do a video on what are the benefits of futures trading over just about anything else. There are a lot of different benefits. Let's just talk. I'm just going to go from the top of the list to the bottom, not necessarily in order of importance. The first one we're going to talk about is the 60-40 rule. This is regarding taxes, and yes, it's a big deal. You can see on the screen in front of you here, futures contracts in the U.S. have a favorable tax treatment known as the 60-40 rule. Well, what is that? Well, that's where 60% of the profits are taxed at long-term capital gains. Okay? So for those of you that know, your long-term capital gains are at a lower tax rate. And then 40% are taxed at short-term capital gains. Yes, even on so-called day trades, even though there's no such thing as day trade rule day trade pattern rule for trading futures. We'll get to that a little bit later in the video. So you get a huge tax break. Well, it's huge. The more you trade, the huger it is. But there's a significant advantage here, right? There's a big tax advantage. Let's say you buy a stock, I don't know, whatever, Microsoft, whatever you buy, it doesn't matter. Okay, Tesla, whatever stocks you're trading. If you buy that stock and sell it all within the same year in less than 12 months, let's say, then you're going to pay 100% short-term capital gains. And most people open and close positions within a year. Almost like a very high percentage of trades are that way. So a lot of people are trading, or I should say are paying short-term capital gains tax. Okay? But in futures, you get to split that up between 60% long-term capital gains tax rate and 40% short-term capital gains rate. And depending on what your income is for the year, that can move around a little bit. But so there's a big advantage, right? There's a huge advantage. I think long-term capital gains tax rate for 2021 is what? Let's see what it is. Is it in here? What do I got? Maybe I'll put it up. Yeah, if you have a long-term capital gain, meaning you hold the asset for more than a year, you either owe 0, 15, or 20%. That's it. All right. So that's a big advantage right there is the 60-40 rule. Okay. Let's look at number 2 here on the list. Significantly better leverage and margin benefits. Okay. So on that one, I think I have a screenshot for that. Let's look. Yeah, here you go. So this is a very simplified example. A lot of you are trading the SPY, right? The S&P 500 ETF, known as the SPDR. So that's the first line at the top of the spreadsheet here. So if you do a quantity of, let's say, 5 shares in the price, I'm just picking a price, $441. Let's say that the CHG, which change, means the price change for that day. Let's say it went up $10. You get a $50 profit, right? 5 times 10, $50. But to make that trade, look all the way to the right, it costs you $2,205. Or in other words, you either have to have sufficient margin or cash in your account to make that trade. Otherwise, your broker is going to tell you, forget it. I'm not letting you trade 5 shares of SPY. You don't have enough money in your account. You don't have enough margin in your account. If you're a cash only account, then you would need to have 100% of the cash to cover that position. If you're a margin account, well, I think it's got to have at least 50% or more. I won't even get into, that's just how ridiculous that is. So even if you have a margin account, I think you need 50% or more. And some of these symbols, even with a margin account, they force you to have 100%. So just looking at that, you'd need $2,205 to make that trade on the long side. Now look below that, the S&P 500 E-micro futures. The one contract equivalent. Same $10 in change, I should say same 10 points in change for price, same $50 in profit, but look what it cost you. The margin was only $1,265 for the initial margin leverage on that order, on that position, I should say. So why is that a big deal? The big deal is that the other $1,000 you can use to either take out another contract, and now you'd make $100 profit instead of $50. While the SPY, you'd be stuck. You couldn't go any higher. Or you could use that $1,000 for other trades, other futures products, crude oil, whatever. Okay. So this is just one example why, another example why futures is a huge benefit. Okay, let's look at the third one on the list. Long or short position makes no difference on margin requirement. Unlike equities, you have a huge margin requirement. You got to have a 100% margin requirement on the short side. Some of these stocks or stock indexes, you have to have 100% margin requirement. You might as well just have a cash count at that point. It's no different, right? So there's a big penalty when you're trading equities on the short side. But in futures, it doesn't make any difference. Long or short, it's the same margin requirement. It makes no difference. They don't change it on you. Huge advantage. Because it changes your mentality, right? If you knew you can trade short or long and it makes no difference on your margin requirement, well, you're not being penalized by the broker and all the crazy rules for trying to short something. And the risk department at these brokers are freaking out because you shorted something. Oh my gosh, the risk department is going to do a margin call on you. And I'm not saying you can't have a margin call on futures. You can, but since the margin requirement's significantly less, long or short makes no difference. When I'm trading futures, I don't even think about it anymore. I don't care long, short, whatever I need to, whichever direction I need to go in. That's why I don't. You never know, or some of you out there probably think of it this way: up is good, down is bad. Am I right? Raise your hand. Come on. But like 99% of the people out there raising their hand right now. Up is good, down is bad. Well, when you're a futures trader, you don't think like that at all. Up and down is good. Or I should say up or down, because you can't be both at the same time. Right? If it's up, that's good. If it's down, that's good too. Now just stop and think about that for a second. What if you knew that trading short was just as profitable and beneficial as trading long, and you knew there was no difference in margin and none of it made any difference? That's the benefit of futures trading. Okay, number 4, you're not restricted by strike price game. Options are a joke. Okay, sorry, I'm just going to say it. Maybe that's being unfair. Okay, they're not a joke. They have their place. But the whole strike price hierarchy is a con. I'm just going to say it. Being restricted by strike prices. You don't have that in margins. You got tick and tick values, and I'll let you explore that yourself, but you're not restricted by strike price. Trying to find the right strike price. Oh, should I go up to the next strike price or down? I'm in the money, I'm out of the money. Oh, gosh. I don't trade options because the whole strike price game is ridiculous. I used to trade options, so I know all about it. Traded options for years. And I started trading futures, and I realized, forget those options, man. No more strike price game. Oh, the strike price game is the biggest con ever. Number 5, there is no day trading pattern rule in futures trading. You can trade all the futures you want all day long. You can make 50 trades in a day if you think that's going to make you a lot of money. Not necessarily saying that 50 trades is a good idea because you're going to pay some commissions, but it might be good, especially if you're making a lot of money doing it. And the commissions wouldn't really matter. No day trading pattern rule. Don't have to worry about it. Though some brokers may up your minimum portfolio account value, right? They may say you have to have a minimum account value. So that's kind of broker independent. So you got to check with your broker. Okay, number 6. With futures, you get to trade 23 hours a day. Most futures products, not all. Some of the grains and some other futures products don't trade 23 hours a day, but most futures products trade 23 hours a day, 5 days a week. And even though nighttime sessions too tend to be slower, just this past week, I made the majority of on some of the days, I made my biggest trades in the overnight session. That's where my biggest trade was. Sometimes that was my only trade. Now, that isn't always true. Usually the daytime sessions where the money's made, even for futures, but not always. And depending on what the market's doing and how busy and active it is, that nighttime session, overnight session, can be very profitable. It has been for me on many occasions. So that's another huge benefit. 23 hours per day trading on most futures products. You're not going to get that with equities, stock indexes, SPDR, options. Forget it. Even options you can't trade at night. Sure, you got the extended session, an overnight session for the SPY, but good luck. Is like, the activities not very good sometimes. And most stocks and most other equities are, you can't trade them at night, but futures you can. Okay, number 7, leverage. This is a huge one. Let's take, for instance, the E-micro S&P 500 contracts. This is just ballparking here, right? But the contract, let's say, currently has an approximate value of $20,000. And depending on your broker and some other things, but that could be traded during the intraday session for as little as $50 for one contract, which is 1/4 of the total value. So you got a leverage advantage of 400 to 1. Now, this may not always be true depending on the broker and all that, but we're just citing an example here, okay? Imagine that leverage advantage, 400 to 1 leverage advantage. It's huge. And if you do have to hold the position overnight, I'm just using TD Ameritrade's for this one. Their overnight margin requirement is $1,265, which is give or take 5%. Still huge advantage. Massive advantage. Okay, lastly, diversification. When you're trading a stock index like the E-mini or I trade the E-micros, let's say let's say you get some bad news on a stock in one of those 500 stocks that make up the S&P 500. Well, that news is just spread out over the entire 500 different corporations, right? The 500 different stock symbols that make up the S&P 500. So, if you get bad news, it's not going to crush the index. Whereas an individual stock could absolutely get smashed. You get a report or rumor that comes out. But for the S&P 500, the impact is usually going to be very little or not at all. So a big advantage there over equities. Okay, so I'm just covering some of the advantages to futures trading that you're going to have. These are some of the biggest ones. There are other advantages, but I hope you can, if you need to go back and pause the video and look at some things and just look through this list again, go ahead and do it. I don't even trade options anymore. I don't waste my time trading options. There's just so much more profitability for me anyway in futures. I do still trade stocks occasionally and corporate bonds. But I haven't touched stock in probably a couple months. I had a nice position on a stock, a coal stock, and I sold it at a really nice profit. I haven't touched stock since. And why would I? I'm making big profits off of futures that I would never get trading stock. Not even, no way close. This week alone, if you didn't watch my yesterday's video, I'll put a link in the description below. Watch it. For the week, I made $6,800 for the whole week. Now, I'm not saying every week's going to be that good. I hope it is and better. But I'm just saying, good luck doing that on trading stock consistently. At least for my account size. So it's not even close. So I hope you can see the big advantage of trading futures. Hope you enjoyed the video, guys. Subscribe to our YouTube channel. Make sure you click the thumbs up. I really appreciate it. And don't forget to click the little bell to be notified of all the videos as I put them out. We'll talk to you all real soon again next time.